Hello, 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 hello. All right, welcome, guys. Uh, Welcome to my third video on technical analysis of the stock market. Let me see if this is working. Looks like there is some lag. Okay, it's working now. Okay. All right, welcome. I am Taz. Welcome to technical analysis. My YouTube channel is Wish Me Good Luck. If you are new, welcome. So in this video we'll talk about SPX, uh, S&P 500 index, and what you can see uh, from the chart is it has been a lot of whipsaw. We had a collapse from December 21st to June 22nd, and then it has been whipsawing. And Michael Burry has tweeted uh, about the collapse. Let me see if I can get that tweet. You can follow me on Twitter as well. Let's see what I'm talking about. Okay, here we go. He has been bearish. Uh, Here's what he said recently. So if you can see, uh, inflation peak, but it is not the last peak of the cycle. We are likely to see CPI lower, possibly negative in second half 2023, and the US is in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not hard. So what this means is the business growth will be dampened because of inflation. When inflation goes up, sales go down. So he has a dire warning for 2023. You have to read between the lines here. This person is sophisticated and he's not going to speak straightforward. It's going to be in ruses. And so if you come back here, so what I've done is, my view is it's bearish market right now. And with that, let me see if I can show you the chart here. Okay, this is a weekly. Let me see if I can do a monthly. So first thing I want you to see is the red channel, and it has fairly captured all the action since 2009 bull market. So all the price action is within this trend line. So it's very reasonable to see that the price has been hugging the top line, and then it touched the bottom only in 2020. So with all the inflation warnings from experts like Michael Burry and others, Jeffrey Gundlach and Jeremy Grantham, etc., what I'm envisioning is that the market will is in its final drop, if you will. Once it starts going down, we saw the next leg of the bear market, and that's when the maximum pain is inflicted on the consumers of the stock market, which is almost everybody in today's day and age. So with that said, let me explain a few things that's happening. First is this channel pattern. If you assume the market is going to just stay within the channel, then the price target is 3,200, 3,200 roughly. Okay, that is the first target, one target from the channel. Second, if you did a fifth channel from the bottom of 2020 to the recent top, you can see uh, the 0.618 level is around 2,900. So that's a second target. And then you have the next is 0.786, that is at 2,600, and the 0.886 is level is at 2,430. So those are the potential targets based on the Fibonacci retracements. So that is the second pattern. The third pattern I want to show you, you got to pay attention here. Let me switch to the weekly. Is this head and shoulder pattern, which is here. Let me draw it so you can probably see it better. So this will be the head here. This is sorry, that's the shoulder. This is the head, and we are now in the right shoulder. So once this is complete, then that is 29% drop. If you take that, you're targeting 2533. That is the head and shoulder. Okay, so that's the third pattern I'm showing. Now it gets interesting. There is a fourth pattern I have identified. I'm going to show you that. And I don't know if I have drawn it here or it's in a different channel here. Let's see here. There is the fourth one is, I call it the halfway pattern. So what that means is typically these markets create something called halfway patterns. So let's say it starts there and it drop to here. Okay, that's the first drop, and we consider this area, this whole triangle. Let me show what I'm drawing. Let's see, rectangle. Let's see if I can get a rectangle here. Nope, not rectangle. So let's see, polyline will do it. So this from here to here, and here, and here, here. That is a zone of what we call halfway, because it dropped and then it formed this pattern. Say whatever you call it. It's like a trapezoidal type pattern, right? Okay, so this is what we call halfway pattern, and then I am expecting it to drop from here. So you have to measure from here to here. So that's going to be, so I'm looking at 24%, and that's going to be 24, and that is targeting 3096 half. That's again 3100, right? That's that. And let me finish up that pattern. So that's that. Okay, 4 patterns already. And then I want to show you a fifth one, which is this. Let me zoom out so you can see this blue channel. The blue is ignores this breakout here. It considers these. You can see it, this line, how it goes down, slopes down, and then catches this bounce here, catches this bounce, this, catches hit here, and again it's perfectly catches this one. So I'm calling that the blue channel, right? And that is targeting around 3061. Okay, so I have 1, 2, 3, 4, 5 patterns already, and I want to show you sixth one, sixth pattern, which is this feed here, a ghost feed. So this has been derived from the 1973, 74. Between 73 and 74, there was a drop in the S&P 500. So I grabbed that pattern and I overlay it here because in 1974 we had a similar situation like we have now with high inflation, similar to what we have now. So I grabbed that to simulate that type of environment in the economy. So if we drop that here with this halfway pattern, it's ironic, it's surprising that it catches, it heads down to the 0.786 level, breaks down, goes to 2515, and then starts double bottom and then goes up. So if we see that kind of situation, then that would be very favored, most favored outcome for this bear market. So that target, let's call it 2600. So we have so we have 6 patterns to summarize. One is the red channel with a target of 3200. We have the fib channels with targets of 2900, 2600, and 2430. Then you have the head and shoulder targeting 2533. Then you have the halfway pattern with the red stars targeting 3096. Then you have the blue channel targeting 3061. And then you have the 1974 pattern targeting 2600. And then I just noticed there's a seventh pattern here, that is this channel, red channel, downtrending channel. So if you see this, oops, sorry, not okay. I don't want to confuse you guys more, but here's the channel I'm talking about. So that whenever it hits, that's also targeting around 3100. So now is the time to look at what all this information has been free to you. Only thing I ask you to do right now, just take a minute before I continue. Click on the subscribe button, click on the like button and the bell icon. And only thing I'm looking to get out of this work is your wishes, best wishes for me. So I ask you to wish me good luck. Please wish me good luck. That's all I ask. Everything is free. Everything is free. So with that, thank you and catch me on the next one. Uh, and we'll cover Dow Jones in that next video.